Good evening, everybody. This is Johnny Seville from Acorn Wealth, and this is your executive summary for stock setups for Wednesday, the 11th of May. So let's have a quick look at the S&P 500. As we've been talking about in Trading Room and many of our webinars recently, we're basically now seeing that completion, or the what looks like to be the completion of a likely head and shoulders pattern on the daily chart of the S&P 500. So we've had that big rally today, breaking open range by 1 point, but remember we need to close 3 points above open range for us to see a breach. So the high of open range on May 2nd was 2083.42, so we need to close above 2086.42 for a break of open range. Now this would if we follow the head and shoulders that I've currently got charted on the screen, we could easily kind of test the high of 2090, 2092 tomorrow, have an intraday high there, and then pull back and close basically close to where we closed today. Like we saw in the left shoulder over here, it can just kind of consolidate sideways before the drop. Now, if that were to occur, then we're looking for that basically to be the top of the market, and we're then looking for a breakdown towards that 2000 level that we've been talking about for a while. And then on the larger scale chart, looking at the weeklies, we'd be looking at a possible drop down to the neckline of that larger time frame head and shoulder, which would bring us down towards that 1700 level. So that's basically what we're looking at on the daily as well as the weekly chart. Now let's go back to the daily. The other thing that's been really interesting to watch, as I indicated in Trading Room today, is the high yield bonds, which is the risk on trade for smart money. Now, if risk is coming off the table and smart money is pulling out of corporate high yield bonds, this is what you see. You see this divergence in the money flow and then a rapid drop straight towards zero. So this is very exciting for the shorts, and obviously the next few days are going to be critical in terms of determining where the market direction goes. So in having a look at some of the different plays that we've been looking at, obviously EDC is holding up extremely well, and this one is of course one of our alerts from just a few days ago. And with EDC, we're looking at the $49 July puts. So right now, that is looking great, and we could certainly just hold this resistance and plummet straight from here, hopefully. That would of course mean the emerging markets are dropping, as this is buying puts on the bull index. You can also look at EDZ, which is where you can buy calls. Maybe there's a bit more volume there in the calls on EDZ, which is obviously the same thing. This is the bear ETF on the emerging markets. Okay. So let's go through the other stocks. We've got DLPH. This is looking really well. Again, money flow has stayed negative. We're holding under resistance. So this one is holding up strongly. Right under that resistance level there, you can see. Okay, we've got eBay looking really solid also. It's holding underneath its trend line resistance. Money flow completely coming out the back door on eBay as well. We've got DXCM. Again, very similar as we're seeing across the board. These stocks have broken down beneath their support, and they just basically rallied into resistance today. So DXCM also looking solid. Target came very close to our stop loss today, but didn't quite hit it. But again, we can see the that kind of indecision candle today, as we touched on the 22.3% Fibonacci, just holding beneath the stop loss. So target still looking good. JD obviously had that beautiful gap down. Options were up from $1.90 to $2.90 on the ones that we'd highlighted in the stock report. Again, all of the entries, exits, and stop criteria are all in the stock report. So just check your junk mail if you haven't received that. That was sent out a few hours ago. So, but this one reversed today, closing kind of midway in its range, and so that's still looking bearish, but certainly something that you could have taken some profits on yesterday after that big gap down. Goodyear Tire, which obviously is one of my favorites, looking at the longer term head and shoulders here. And that one had a very bearish close today and yesterday, in fact, closing in the bottom half of the range on both candles, and a really lackluster volume. 4.76 million on Friday, 3.18 million yesterday, and only 2.95 million today, as we run into the again the 61 point at Fibonacci and the overhead moving average. So GT looking also really good. TROV, it's holding really well. Of course, that's already hit its first target of 357, so looking good for its next second target of 307, as it did not perform well in today's rally at all. Again, hitting its resistance yesterday and just turning around today in weak trading. Netflix. Looking at of course, is the June $90 puts, what we'd highlighted here recently. So this looks like it's heading strongly towards its target of $80. Again, it rallied into resistance today. It's stronger than some of the other stocks, so that concerns me a bit that it could stop out, but still a very valid play. Of course, that's dropped nicely down from the rising wedge formation back up here, and continues to be strong. Abercrombie and Fitch, beautiful. That hit its $25.73 target with ease. It's obviously starting to bounce off that support we were cautious about, so we'll see how that one performs going forward. But certainly that one's already hit its target. Another one also that we're also quite excited for tomorrow, ZUMZ. Again, contracting range candles, volume 528,000 on Friday, 497,000 yesterday, only 290,000 today. Looking like that's about to turn off that gap resistance as well as the moving average ahead. So also very excited about ZUMZ, wanting for it to turn down as well. Now, in terms of a couple of new potentials, there is we've got 5. Now this one has obviously been in an upward channel, a bit of a weird channel, but a channel nonetheless over the recent history. And this one I like if we have, because of the divergent money flow especially. So I'm looking for a break of 38.67 with a first target of 35.63 and a stop loss of $40.13. So 5 below. There's the first one. The second one is Crow, KRO, looking at an entry at the current prices and with the stop loss criteria around 623 and a target of 453. So lots of potential in terms of risk reward there. Now, looking at this is part of the basic materials sector, and having a look at the basic materials sector, you can see that it's certainly broken down out of a nice long upward channel and is holding underneath its respective resistance levels. So playing into the weakness of the sector, that should also do well on Crow. And last is Sun, which is an oil and gas play. And as you can see, again, an upward channel that we're breaking down. Huge divergence in the money flow, dropping straight from a positive 10 to negative 25. And for this one, I reckon there's a good short at the current levels with a stop at 34.93. And I'd be looking at 2 targets here, one at 29.30 and a second at 27.08. So those are my favorite plays for going into tomorrow's market. Now, one final question is, I was talking about the level of insider selling coming from all the sectors. Again, you can see that along with what I talked about earlier in terms of weakness of the market, you can see there's huge amounts of insider selling, the red candles, versus the buying, blue candles, over the last 30 days. So there's a huge presence of selling. Now, I was asked the question, but hang on, John, if we've seen that the most amount of selling is happening in the financial sector, doesn't that mean that the weakness is already over and that this sector is now oversold? Well, not really, because most of the time, the reason why we're looking for insider selling is that normally happens well before, in my experience, to the actual market dropping, because the smart money is already getting out well before everyone else does. So the selling happens before the stock sometimes even starts to move. And so what we're looking at, this is a precursor to the sector's movement. So when we're seeing that, what we're looking for is in the last 30 days, where is that largest amount of money starting to move out? Of course, if we look at XLF being the financial sector, we can see that really that hasn't, in terms of a equity level or an index level, that hasn't yet dropped at all, but it has been the place where the largest amount of insider selling has taken place. So just a quick answer to the person who'd emailed in on that question. Obviously, I hope that helps, and we'll see you all in tomorrow's executive summary. If you're not a member of our Gold membership and you're not receiving these every day, you can sign up for only $9 for a trial for a full month, and you simply go to acornwealthcorp.com/gold. And look forward to seeing you all in the next summary. Take care.